Hello, Mark Sturdy here with highlights of this week's 7 Days Ahead multi-asset technical strategies. And let's look at the summary. On the face of it, not much has changed, but actually beneath the top line views, which are unchanged, there are things happening that we need to note. First of all, just to recap with the currencies, we remain dollar bulls against everything, and it's accelerating. Let's look at the dollar euro. Over the last week, we've paused at the prior low and now pushed absolutely unequivocally beneath it on Friday. This level 1.0804 will be good resistance now on any attempt by the currencies to rally back, which I don't think they will. And I think the market is going to push on hard, long of the dollar, short of currencies. Sterling euro is sidelined. It remains right at the top of the range, not going anywhere very fast. Stocks, on the face of it, we remain uninvolved. But actually, beneath the surface, there are interesting things that we should watch carefully. The recent pullback in the euro stocks, for example, found very good support in this very long-term prior high supports going all the way back to 2015. There was a rally, and the rallies failed. This is the weekly chart in the June contract of the euro stocks, and the markets tried to go up through this band from the prior lows, and has failed. Short term, we're in the process of, there's the two failures to get up. This is the specific. That's the weekly chart. This is the day chart. This is the specific the detail of that failure. Once, twice, trying to go ahead, attempts to break back through the diagonal and the horizontal has failed. But more than that, the market supports, which have held all the way along here throughout March and most of April, look to be under great pressure. If this is a confirmed breakdown, it could lead to another leg down in the euro stocks, another leg down through here, and another important assault on these long-term supports. We are on the 25th of the month now, just 5 or 6 days to go. If the month chart closes beneath, for example, 3703, that would look very poor for the euro stocks. And there are other similar stories in the S&P, the FTSE, relatively strong FTSE, and the Nikkei, which is relatively sidelined. The reason it's sidelined, or rather, the evidence for it's sidelined, is this sideways price action for quite a number of quarters back to the year 2020. So there we are since 2020. We've been going sideways in the Nikkei, and there was a possibility of a top formation which it bounced back and broke, but the market is, in short, stand aside from the Nikkei. It's not clear, but it's not as perilous or precarious, you might say, as, for example, the Eurostoxx 50. Turning to the bonds, we remain big bulls of yields across the board. No news there. The markets are going far and fast with no convincing evidence of reversal yet. So this is the trend that has a slight pop-up at the end of last week, but a lot more has to be done to threaten this overall trend. Oil and gold, we have disappointed bulls. We were bullish of oil on the basis of this reversal and support, diagonal support. We thought this consolidation might have resolved itself into a continuation triangle. It hasn't done. It's drifted back. There's the triangle and the pullback through the upper diagonal. So we're not abandoning our overall bull stance in the crude, not while this consolidation remains supported by this diagonal. That may not last, but for the moment, we like this also this weekly key reversal here. But we're not abandoning overall the bull sense of where it is, but short term, we are disappointed, no question. And similarly with gold. Gold, we know, is dithering around this important prior high, 115, 110. Beg pardon. Gold. It is at the 1915 level of 2011. The pause has been going on for some while. This is the weekly continuation chart, supported by 1920. We think this is a double bottom. That's the June weekly contract, and similarly a double bottom here as well. However, short term, we thought there might have been a breakup and a completed double bottom here last week. It hasn't done, it's drifted back down. All fine and good to remain bullish, it seems to me, because of these weekly charts, but a break beneath 1900, 1893 would be distinctly uncomfortable for the bulls, even the medium-term bulls. So we're watching that carefully. Thanks very much.